Hello and welcome everybody to another edition of Mexico News Network's Breaking News Business. I'm your host, Elliot Bullman. Remember to follow us on all our social networks and to catch us every day by logging onto our website, mexiconewsnetwork.com, for relevant stories and news. Let's start with today's show. The increase in Mexican gasoline prices is expected to boost the market for more fuel-efficient cars, according to leading Mexican auto industry group AMDA. Mexico's finance ministry announced that gasoline costs would rise by up to 20% in January as it moved to end years of government-set prices, prompting economists to begin upwardly revising inflation forecasts for 2017. Higher motoring costs could put pressure on what has seen hitherto a brisk appetite for new autos in Latin America's second biggest economy. Vehicle sales in Mexico rose by 18.5% to more than 1.4 million in the year through November 2016, official data shows. Guillermo Rosales, Deputy Director of the Mexican Association of Automobile Distributors, said higher fuel costs would likely boost demand for more energy-efficient cars. In the short term, I don't think there'll be a decline in the number of vehicles sold, Rosales said. In the medium to long term, we'll see a change in the trend that favors models which consume less fuel. Mexican motorists were downbeat about the immediate outlook, saying they would have to work longer hours and spend less to compensate for higher fuel costs. On Christmas Day, Pemex cautioned Mexicans against making panic buys of fuel in the central state of San Luis Potosí, as gas stations reported shortages. In other news, Mexico's economy is projected to slow considerably in 2017 due to uncertainties about U.S. trade policies from the incoming Trump administration, according to predictions from a panel of economic experts from banks, universities, and other institutions in the United States and Mexico, a new report shows. The Mexican economy is projected to grow 1.4% in 2017, compared with an estimated 2% growth in 2016, according to the Mexico Consensus Economic Forecast, published in December by the University of Texas at El Paso Department of Economics and Finance. Towards the end of November 2016, Mexico's central bank cut its 2017 economic growth outlook to between 1.5 to 2.5% versus a previous 2 to 3% because of President-elect Donald Trump-induced uncertainties concerning Mexican exports and foreign investment in the country. Economic experts from 2 of the 9 institutions in the UTEP report declined to make a 2017 economic forecast, and one economist from Wells Fargo Bank predicted Mexico's economy will shrink in 2017. Investment growth in Mexico is likely to suffer at least a temporary setback, due in part to uncertainty tied to Trump's trade policies, the report states. The experts project the Mexican peso will stabilize at 20.7 pesos per dollar, near its current exchange rate. Even with the weak peso, consumer spending within Mexico is expected to show healthy growth, which is expected to help the Mexican economy in 2017, according to the consensus report. In other headlines, the Mexican sugar industry expects 2017 to be a good year as prices remain at historical highs and the upcoming harvest is expected to be close to 7 million tons. Sugar production represents 3% of Mexico's GDP and employs over 2 million people in 16 states, both directly and indirectly. Sugar Union leader Adrian Sanchez said that producers expect to obtain 6.4 million tons of sugar by the end of this year's harvest, bringing the industry closer than ever to its goal of surpassing 7 million tons. The union leader said the industry is committed to boost productivity, efficiency, and timeliness. A considerable percentage, 2 million tons of the season's production, is expected to be exported to the United States. It's a number that varies widely, explained Sanchez, from 500,000 to 1.2 million tons. Sugar issued an open call to end speculation about how bad a Donald Trump presidency would be for Mexico, urging all sectors of the economy to work together instead to confront any negative outcome. Sanchez believes that if the North American Free Trade Agreement is to be renegotiated, a clear mechanism should be set in place to determine how much sugar is to be exported. Otherwise, the import of American fructose will continue to negatively affect the domestic market. And finally, let's have a look at the markets. The Mexican peso decreased 0.18% to 20.69 from 20.72 in the previous trading session. Historically, the Mexican peso reached an all-time high of 20.77 in November of 2016 and a record low of 0.01 in May of 1972. IPC Mexico increased 0.11% to 45,695 from 45,643 in the previous trading session. Historically, the Mexico stock market IPC index reached an all-time high of 48,694.9 in August of 2016 and a record low of 14,008.2 in August of 2005. This was all for today. Thank you for staying with us. I'm your host, Elliot Bullman. Remember, you can follow us on Facebook, Twitter, and Google+. Log on to MexicoNewsNetwork.com for more information on Mexico and the world. Until next time.